Look for 2021, and here are the findings. The majority of those analysts expect that the S&P 500 has another 10 to 25% upside in store for the coming years.
The stock market reached yet another all-time, in history, all-time high today.
That in 10 or 20 or 30 years, I think stocks will be a lot higher than they are now.
Okay, today we're talking about why the stock market booms, but the Americans go broke. When I say that statement, what's the first thing that pops to your head?
The system is broken.
Two different things.
What you mean by two different things?
Like the stock market is like its own entity, and then like America's going broke. Totally different categories.
You know, the first thing I think about is liabilities and assets. I think that's the biggest thing with, America as a whole. We focus on liabilities and not assets. And I think that's the biggest thing that hinders us, moving forward and obtaining a financial structure, and ultimately achieving financial freedom.
When the system was instituted in various parts of our country, it was a thing that was exposed recently within the last 20 years or so, called redlining. So by design, black families and lower income families was geographically migrated or sectioned off in communities, and less resources would go there. As a result of less resources, you see, more crime. People fighting to survive.
I'm gonna go with education, like Ron said, and also financial stability. I feel as though like the people that's educated in like financing and money, they're better off. But then the people that paycheck to paycheck, struggling, they're the ones that's more in debt.
The American dream, when you think about the American dream, what do you think of?
The way it's taught is, going to school, get an education, pursue a career, or land your career, retire, or buy your home.
The moment we start focusing on assets is the moment we can start being into a different financial class. And I think that's the biggest mistake we make growing up and continue to make, is focusing on liabilities unknowingly. And that's besides trying to get like a nice car and get other things that you may be looking to get.
So I gotta give you some pushback on that. I think that, it's been proven that a house is an asset, but the difference in how one person uses the asset versus somebody else falls in line with what your biggest point is, which is financial literacy. So it's how I use this particular asset. Do I use it to catapult me, as a resource to make other moves, financial moves, to create more income?
Again, financial literacy.
Right.
Most people that's buying a house is buying it to live in. Is buying it for it to be debt based. It's not for a asset. It's not for asset. So when you buying a house, to me honestly, it'd be smarter to rent an apartment, rent a house, gain assets. In the article, like they said, most come from stocks. You could be using that money to invest into assets, and then when you're able to buy a house, then buy a house.
I think the difference lies into your biggest point, which is the financial literacy. The house itself is the asset, right? That doesn't change. What I choose to do with the asset versus what another person chooses to do with the asset is the underlying factor.
People that's not educated goes back to what you two just hit on, financial literacy. We don't learn that in the school systems, well, at least in America. We don't have no financial classes. I haven't. Have you?
Americans go broke, and the rich get richer, and the poor get poorer. Because, you know, don't get me wrong, we got the rich who do tax evasion. We got the rich that find the loopholes that, you know, the poor may not have access to or don't know about. But some of them don't got access to the loopholes because they don't have assets, if you really think about it. So again, whatever you choose to invest to, you don't have to be rich. You don't have to be rich. But to be financially well off, you need to have more assets worth more than your liabilities by far. You shouldn't have to wait to get to college to start learning about financial literacy and investing and entrepreneurship. I shouldn't have to, granted it's scholarships out here, but I shouldn't have to indebt myself to learn about America's financial system.
It seems to me that the system is designed to inflate circulatory.
When the pandemic happened, the stock market was thriving during the middle of, you know, an unemployment crisis.
Right.
And so you would think that they correlate, and they really don't.
Who does inflation affects the most?
Mm-hmm.
And it would be the middle class. And that's the people that's not investing into the stock market. See, like the upper class, or, you know, the higher class, they invest. They understand. They have the financial literacy. Inflation don't really affect them. So, you know, it's day by day, they go about their day. But, you know, your middle class citizens, they don't even think about inflation. They don't think about investing because they got that everyday life to worry about. How I'm gonna, you know, you might be living paycheck to paycheck, might have a big bill about to come up. Like, that distracts them from seizing the opportunity to invest into the stock market, obtaining the knowledge about inflation and how to go about it in the future, and dictating their moves. So that's my thing. It all depends on what class.
So if you enjoyed this video, give us a like, comment, subscribe. We appreciate the love and support. Tell us what you think. Why does the stock market continue to boom, but Americans continue to go broke? Thank you for watching this video. Welcome to the new age. We out.